Hi, this is Drew with Daniels Ag Services with your morning report. Grain markets all finished up higher yesterday, slightly higher. We had some pretty tight trading ranges yesterday on light volume. No one's really wanting to step in and trade a whole lot ahead of today's USDA report. And moving forward this morning, we're mixed this morning, pretty tight ranges as well on lighter volume. We had export sales release this morning. You had corn was seen as neutral to bearish, beans were seen as neutral to bullish, and then wheat was seen as bullish. But the main story remains the latest round of WASDE numbers that we're getting this morning at 11 a.m. Central. So let's take a look at our whiteboard here, go over the numbers. We went over them yesterday, but let's take another look at them here to get them fresh on your mind. So what we're going to go over here is we're going to go over 2013-14 production first, and then what it was compared to the USDA in August. Now these are the average trade estimates. If you want the full range of estimates, and some other numbers that obviously can't fit on this whiteboard, go over to grainanalyst.com, go to the daily report. We'll all be there waiting for you. So 2013-14 production average estimate was 13.62 billion bushels. That compares to August's number from the USDA of 13.763. And for beans, 13.14 billion bushels compared to August of 3.255 billion bushels. So as you can see, production is expected to drop, taking into account the warm and dry August and early September we've had. So yield coming in is expected to come in for corn around 153.69 bushels per acre. USDA August came in at 154.4, and then yield for beans 41.172 bushels per acre compared to USDA August of 42.6. So as you can see here, we're expected to lose almost a bushel in corn and about a bushel and a half in soybeans. So take a look over here at ending stock expectations. Corn expected to come in around 1.732 billion bushels, compares to August USDA of 1.837 billion bushels. And then for soybeans, expected to come around 165 million bushels, compared to USDA August of 220. And then wheat expected to come at 551 million bushels, matching what the USDA had in August. Camera there had a little snafu. But as far as ending stocks goes, this is pretty telling right here for soybeans. Typically the USDA doesn't like to lower usage anywhere below 125 million bushels. So over here, it gives us almost 100 million bushels in reserves. Well, the latest number expected is coming around only 40 million bushels. So that might sound like a lot, but in the reality of things, it's really not a big cushion. So that's something we need to keep our eye on and could definitely drive soybean prices higher if that ending stock number comes in pretty low. Of course, yield and production could affect that as well. But that's one of the telling things for today's report that we'll be keeping our eye on. As always, after the report, I'll have a new video updating what happened in the report compared to the averages and how the trade has been reacting. So again, not a whole lot of activity pre-report. That's kind of what we've been seeing lately ever since these reports started being released during trading hours. Used to, when we had them released at 7:30, we had a 2-hour pause to digest the data. Yeah, we might gap open higher or lower, but at least it gave us a chance to go through all the data because there's so much that's released. Now the market can swing violently one way or another without knowing the full scope of the report. So a lot of people aren't willing to head into the report with positions because of that. Thus, we're seeing lower volume and lighter volatility. So stay tuned for after the report. We'll have an update for you. And until then, have a great day.
This material is conveyed as a solicitation for entering into a derivatives transaction. This material has been prepared by a Daniels Ag Services broker who provides research, market commentary, and trade recommendations as part of his or her solicitation for accounts and solicitation for trades. Daniels Ag Services, its principals, brokers, and employees may trade in derivatives for their own accounts or for the accounts of others. Due to various factors, such as risk tolerance, margin requirements, trading objectives, short-term versus long-term strategies, technical versus fundamental market analysis, and other factors, such trading may result in the initiation or liquidation of positions that are different from or contrary to the opinions and recommendations contained therein. Past performance is not necessarily indicative of future performance. The risk of loss in trading futures contracts or commodity options can be substantial, and therefore, investors should understand the risks involved in taking leveraged positions and must assume responsibility for the risks associated with such investments and for their results. You should carefully consider whether such trading is suitable for you in light of your circumstances and financial resources. You should read the risk disclosure accessed at www.danielsagservices.com. Daniels Ag Services is not affiliated with, nor does it endorse any trading system, newsletter, or similar service. Daniels Ag Services does not guarantee or verify any performance claims made by such systems or services.